And we are live. Welcome to Staking Monday Season 2, everyone. Last season, we had guests like Do Kwon, Stani from Aave, and much more. Make sure to go check out all of Season 1 on YouTube and Spotify. Of course, Staking Mondays is a weekly show where we share knowledge from key staking industry leaders with our community, and this is all powered by stakingrewards.com. At Staking Rewards, we're helping investors navigate the landscape of yield-generating digital assets, helping them find the best opportunities to earn interest on crypto. My name is Ken, and I'm with the co-founder of Staking Rewards here today, Merkel Schmiedel, and we are delighted to welcome today's guest, Dr. Julian Hosp. Julian Hosp
Hey, everyone.
Hey, welcome, Julian. And Julian, you've been in the crypto space for many years here, and you've been a professional athlete, a dentist, before moving full-time into crypto. And you co-founded 10X in 2017 and became a thought leader in the industry with a huge following on YouTube. And you are now the CEO and co-founder of Cake DeFi and DeFi Chain. So welcome very much, Julian. We're really glad to have you here with us today.
Thanks. Looking forward to discussing a few of the topics that are on people's minds right now.
Absolutely. And just to give you a little icebreaker to get you more comfortable here, if you could just introduce to us which cryptocurrency first caught your interest outside of Bitcoin and Ethereum?
That's a hard one. Which one was after Bitcoin, Ethereum? I invested in a lot of ICOs during 2016, and then through 2017. Actually, that is how my YouTube channel got started, by me analyzing ICOs in 2016. And then looking back, obviously in 2016, all ICOs pretty much went up because it was just a hype cycle. Reminds me a bit of just how most DeFi or NFT projects went up over the past year. But I think over the next 2 to 3 years, that's when it really matters.
Very cool, nice. And then, what do you think about the value proposition of like the biggest two, like Bitcoin and Ethereum? Do you think Ethereum is a competitor to Bitcoin in any way or in any sense? And like, how do you think is that playing out?
I think at the moment there's a bit of a sentimental competition, but actually there shouldn't be. I see the value proposition is totally different. One has the utility of, to me at least, being digital gold and being this digital censorship resistant asset that I think is very, very strong when it comes to decentralization. I think that is its main value proposition. And I think on Ethereum, it's really all about expanding DeFi capabilities, obviously allowing any kind of smart contract that you can come up with. It's, to me, a huge kind of lab where people can try out things and play around. And I don't think NFTs would have gotten created the way they did had it not been for Ethereum. So I don't know. I think also the mindset of the communities are very different. I think they just fight a lot because I feel one feels that the other is taking something away from them, and I just don't see this at all. I think both coins actually are very successful, and I also believe that both coins probably should be in every investor's portfolio.
All right. And do you think there are any use cases outside of like the transactional layer and outside of store of value or like currency and store of value for Bitcoin? Like because it is more decentralized and so on, like if Bitcoin would be able to adopt like this stuff, wouldn't it be like kind of the only one that's still out there if it could do that? And like, is it possible that it can adopt more use cases?
So complexity is always a bit of a danger, and I think what makes Bitcoin so successful is just its simplicity. It can do one thing, and it can do this thing really, really, really well. And I think that is the main key here. I would be very cautious if I were, I don't know, either at, I don't know, a Bitcoin core developer, or if I would be someone who tries to play a bit of with the narrative on where Bitcoin should be going. I'd be very, very careful in adding too much complexity to that network. You look at some of the most successful apps, to go into a different direction here, but you look at Instagram. Instagram basically was all about just sharing photos. Once it started doing really weird stuff with like 60 other features, that's when it became complicated. You look at TikTok. TikTok is so successful because it can do one thing: post like super short video clips. I think people always are worried that, I don't know, one utility feature is not enough, but most of the time it's actually super enough, and now it's all about bringing it to billions of people.
Yeah, and some great perspective there, Julian. And now talking about the market caps versus Ethereum and Bitcoin, do you ever think there's a chance that Ethereum will actually flip Bitcoin? The flippening will happen. You think this is possible?
I think there's a high likelihood, actually. And again, that doesn't mean that I think Ethereum is more successful or Bitcoin is more successful. I think there's a high likelihood for Ethereum flipping Bitcoin. Probably not this year. I would say if the cycle extends, how a lot of the people are expecting to go until mid next year or something, I think there's a very high likelihood for Ethereum to flip in Bitcoin. But then on the other hand, right, every great investor always looks at the downside first. Like, what's the possible downside? And there, I also think Bitcoin is probably right now at a very fair value. I think it's very difficult to argue from a sentimental perspective, from a growth perspective, from what's happening in the world, that Bitcoin has a lot of room to drop. Sure, it can, but that's probably more emotional rather than very rational. On the Ethereum side, though, I think it's always so difficult to value like what ETH is actually worth. I think it's a bit more tricky. So I think on a risk perspective, Bitcoin is the way safer bet. On the potential like upside perspective, I think Ethereum makes it very attractive, and that's again why I think both coins should be in your portfolio. We could argue about the percentage. ARK Invest, Kathy Wood, I think she's on a 2-to-1 now, a 60-40 split, 60% Bitcoin, 40% Ethereum. Yeah, maybe a 2-to-1 or something. I think that's quite interesting.
Yeah, and I'm sure there'll be much chaos if we do ever see the flipping occur here. All the Ethereum maxis will definitely come out of the woodworks just promoting at that point. And just want to remind the audience listening here, I think you guys are already doing a great job adding some questions into the chat, but all the great questions, we're going to try to ask them at the end of the episode here. So feel free to comment your questions if you're watching now. And Julian, just you mentioned earlier about some NFTs and some DeFi. What do you think will be the biggest adoption driver for crypto? NFTs are big, but still not everyone can relate to them. Not everyone can relate to the hundreds of thousands, if not millions, being spent on CryptoPunks. Is it going to be the metaverse that helps drive this adoption, or is it something entirely else?
I mean, I really could see that the metaverse actually, and I still think the metaverse is actually going to include a lot of the building blocks that were kind of created prior to this entire metaverse focus. That, it has been existing in the crypto space probably for the last, I would say, 2 years. And then obviously this year with Zuckerberg and Facebook kind of transitioning into that. I think that is going to be a very powerful kind of value proposition for many people, because they're going to be like, okay, so Zuckerberg is talking about all this and it's so exciting, but man, do I really trust this guy? And do I really want to like use the stuff that he built? Looking at like how I was always the product in every one of the other kind of services that he built. And again, it's free. So what am I going to do there? So I'm probably going to be just the same kind of product. I'm going to be sold somewhere on the back end. I just haven't figured out how I'm going to be sold. And then people are going to look more into this open, decentralized world. And that is where I think a lot of the building blocks, doesn't matter when it comes to very specific projects around the metaverse or NFT or DeFi. I think all those building blocks actually going to fall in, because if you really want to have this open world, then, well, it shouldn't be governed by, or it shouldn't be controlled by one company. Currency in there, assets in there, financials in there, and there needs to be some financial market in there, right? Collectibles in there, galleries, and so on. They're gonna all be used on a decentralized basis. So I think that could be a very, very powerful adoption for the entire crypto space.
Yeah, I fully agree on that. And I mean, even the metaverse, it's not just like a game or anything. It's like, it's everything. It's like all kinds of ownerships, like digital ownerships in the market. And talking a little bit about interest rates in general, which I believe are also like a big adoption driver for crypto right now, that you can earn like very high, like 2-figure percentages on stable coins and like even on Bitcoin and Ethereum. And like I that's mainly driven right now probably because of the bull market and like a lot of people leveraging the market, and like there's a like perceived risk and like regulatory risk for institutions to get into it, like with high sums and so on. And then like for staking, like the high interest rates come from like high subsidies in the beginning of launching a network. How do you think will that change in the coming years? That like the interest rates, will they decline to the levels of like current TradFi, or like, yeah, what's your take on that?
Yeah, I mean, obviously, with our company Cake DeFi, obviously that's a space where we actually think about that a lot, because for us, everything is about providing cash flow on people's crypto assets. And I do think that, especially on the maturing products and the maturing services, yield will go down, simply because the early incentives will like disappear or will go lower, and then other services will mature. There will be more capital in there. At the moment, there's a lot of information arbitrage, where a lot of people can make so much money just because it's so few people actually using it, or they're arbitraging between two services. And so the better all these kind of price discovery tools work, the lower the interest or the lower the rates will get. But at the same time, I expect that you will see newer services again, other services, and I think that is always what you want to look out for. On the one hand, as a user, then obviously also as a company, because these are the services that you want to provide to the users. So I think it will be a thing of both. It will be existing services going down with interest rates, and then new services coming in, people being innovative, and again, this information arbitrage still existing. So yeah, a bit, definitely something of both.
So you think the high interest rates are mainly because of inefficiencies in the market right now?
Yeah, totally. I mean, I really think it's inefficiencies, because as soon as you have, like let's say lending rates, right? At the end, if once banks come in and they come in not with millions of dollars, but they come in with billions of dollars, stablecoin lending rates would drop dramatically, right? Why? Because suddenly there's so much supply. At the moment, there's just not that much supply, because it is a gray space when it comes to regulation on the stablecoin side, as you can see in the US, where there's just a lot of focus on that. So um, over time, there's just going to be so much supply coming in, and at the end, that's going to push the rates down. And then obviously, Bitcoin and ETH lending rates depend a lot on the sentiment in the market. How many people actually want to short that asset, right? And so the more people want to short it, the higher the lending rates are. It's the same as on the stock market. So um, a lot of it has to do there with inefficiencies. Obviously, a bit also with the market sentiment.
Yeah, that makes a lot of sense. And then like how do you prepare yourself or like your company as Cake DeFi for a scenario where the interest rates drop in general, or like prepare yourself for like a potential bear market as well, or like a stagnant market where the interest rates are generally lower? Like, do you have
I think
any
on
strategies
yeah
in place there?
yeah
Or?
on both like on both ways. On the one hand, preparing for rates to go down on existing products is simply by looking for other exciting, interesting ideas that we could add. At the moment, for example, we are looking at this entire concept of decentralized tokenization. Obviously, having these decentralized stocks, decentralized commodities, decentralized precious metals, and understand how could they work and how could tokenization work there, how would the liquidity mining work there. And then I think that is a very interesting market. Then taking this a level higher, how would options and futures work for a decentralized ecosystem there, right? So that is kind of a bit of a step-by-step evolution, and that's gonna take quite some time there. And then at the same time, how do we prepare as a company for a possible bear market is, again, to understand that you're not a fund. I think many companies see themselves as a fund. They earn crypto and then they double down. Basically, they make their revenue in crypto, and at the same time, they become a fund by investing in crypto. And I think that's just super risky. it may work out really well, but it's not what we're doing. So we are diversifying our treasury all the time. We have a very, very like low volatility treasury, especially with a large beta towards crypto, which is important. Yeah, so maybe when crypto goes up, our treasury doesn't go up as much, but that's when our revenue is just going to spike. But in return, if crypto drops and our revenue drops, then we have this really large treasury that has this large beta and completely goes the opposite way.
Are you able to disclose like the percentage that your company holds in crypto versus fiat? It's just like I mean, we as a company are also like considering like what's a good ratio there in general. So it's just interesting if you can share
Yeah,
it.
I think it's not always crypto versus fiat. I mean, it also depends on a lot of other like kind of investment ideas, right? How much do you hold, let's say, in real estate? How much do you hold in just very broad kind of S&P 500 stocks? How much do you hold in bonds, right? Or other cash and cash equivalents? I think at the moment our crypto ratio is about 40% of the assets in the treasury, and 60% are not in crypto. Yeah, so you just try and like you just try to structure the portfolio in a sense where and again, I think it also comes down to how much conviction do you have about the future? Are you very convicted that do you really pull through and you're like, you know what, crypto is going to go up to, I don't know, Bitcoin's going to go for sure to $200,000 or for sure to $100,000, man, then you should really start like swinging through and your percentage should go up. But if you don't have that conviction, then you have to be very careful in not moving your assets into less volatile assets. And then the other thing comes: how do you rebalance the treasury? All right, and that's relevant for every investor as well. When do you move from low volatility to a higher volatility, so from risk off to risk on assets, and when do you not do that? And so again, to me, it comes down to when do you have more conviction and when do you have less conviction of your bets. And so the less conviction you have, and you just have to be honest with yourself, the less conviction you have, the more you have to stay in risk off assets, in low volatility assets, especially when this is your operating capital that, well, kind of, and we have now over 80 employees. I think we have like 100 employees employed, but not everyone started yet. So close to 100. I mean, there's a lot of families and everything attached, right? So decisions there are quite important.
Yeah, and thanks for giving us a little insight on as to how you manage your treasury there. 40% exposed to crypto is still, to me, relatively bullish on where we're headed in the short term or maybe midterm, right? So we're obviously in a big bull market right now.
I am bullish on crypto right now. I want to highlight that, right? But again,
right.
we are like maybe a year ago we were pretty much 100% crypto, and so now we just gradually are reducing that, and we will keep reducing the higher the market goes.
Right, with the rebalancing, right? And so the market in its entirety, about 3 trillion right now. You got Bitcoin at about 65K, Ethereum pushing up to 5K. And you got NFT sales that are through the roof. We're talking billions of dollars of capital flowing through NFT sales. Shout out to any NFT artists if you guys are listening here. Comment some of your addresses so we can check out your artwork. But Julian, so with the current bull market, how long do you think we'll go before we see a major setback?
Yeah. What's a major setback for you? Just so I also have that a bit in. Like, is that like 20%, 50%, or what?
Let's call it over
setback?
a 40% downturn in the course of a month.
I think it depends a bit on how November and December are gonna go. I think if December, like let's say the stock to flow model does not work, or this bottom model Plan B doesn't work, and the crypto rise starts slowing down. Simply what we have seen now over the last months. Let's say this continues for another months, right? And then we're in mid-December. I think people would really kind of start panicking a bit, and they're like, "Oh, nothing is moving. What's happening in the new year? Like, what am I gonna do? Should I rebalance? Or what should I do?" Right? I think people would just get a bit more cautious, and that could just become like really extending the cycle massively until like what a lot of people are saying, where they're like, "Hey, it could go into mid-June," and I actually think what's happening right now. I think I made a video at the beginning of October where I said I don't expect an all-time high in October. Where I would expect the all-time high in November. And to me, the biggest problem I think this market had was this all-time high in October. I think this was not good because it lost a lot of power and it lost a lot of momentum and it sounds weird. And at the end, that's what we saw. We had this rally until mid-October, and then the market totally lost its power, and now it's treading water. And hopefully, and I mean, it looks like there's some momentum, and people are still hopeful. Hopefully, it can push out, but it would have been so much better if that entire momentum would have just come at one and bam, like really didn't do this all-time high, maybe had only gone to 61,000, no all-time high, and then November, bam, it would like, yeah, easily gone to 80 or 90,000 or something. Now, to me, the scenario that we see maybe a bit of a more bearish December is actually almost looking a bit more likely, simply because of that using a bit too much energy too early in October. Yeah, if this entire model is right though, and we get to a I don't know, 100,000 Christmas, which I mean it's possible. Then I wouldn't be surprised if then suddenly the press mills come in and all the retail hype. And at the moment, we see barely any new kind of joiners into the crypto space, right? You can whenever you look at Google search results, you look at any kind of growth numbers, it's like mostly existing people who are already in the space. So this entire new hype for new retail is just not there yet. But then I think this could definitely happen, and then we could really see I don't know, like a super strong Christmas even all the way through New Year. That almost like a 2017, 2018 scenario kind of. So again, it's difficult for me to predict the exact things here. It's either it's either more like a January, February, if December is pumping really strong, or it's gonna go more into a summer low. If Q1, Q2 are gonna, or more Q2 is gonna be a bit stronger. Difficult to at the moment. I really think it's a bit difficult right now.
It is, and a little bit of hopium we're holding on for, but it is kind of unpredictable. But it's definitely a bullish trend, and it is going to be interesting to see what unfolds over the next few months.
It's definitely bullish. So we're talking about like long term, definitely bullish. And I even think, let's say, we run up and then we drop, I think we would still be higher after the drop than where we are right now. So I just want to make this clear. That is also why, like, we have a relatively high percentage in our treasury yet. But so that's a bit of the tricky part. And I would be surprised if the crypto market drops from here. So I would also doubt that the market would go from here now and drop, I don't know, down to 30,000. I think I wouldn't see many reasons why it would do that.
And Julian, you're obviously very tapped in here. So maybe you could give us your bold prediction for crypto and the metaverse in the next 10 years' time. How will crypto change the world?
10 years is tough. I have my challenges always with that the financial system is gonna, like, that Bitcoin is gonna replace the dollar or something. I always have my challenge with that. These challenges will not go away in my mind. So I actually don't see Bitcoin replacing parts of the financial system. I always think Bitcoin is this digital gold. It will become its separate asset class. I think it's totally gonna be accepted as this asset class. And I think 10 trillion, 50 trillion, maybe even 100 trillion over 10 years is totally reachable. So that is fine. But to me, that doesn't diminish the dollar. That doesn't diminish the euro. I don't see the competition there just because the value propositions are so different. And also in the next 10 years, I don't see a single country pricing its GDP in Bitcoin. I just don't see that. I see in the next 10 years, countries still pricing their GDP in whatever local currency they have, or be it the dollar, or be it the euro. So I just don't see that. And we can talk from a game theoretical perspective why that is. It's just because whenever you have something that's more volatile, there's more cost to actually pricing your good in that than something that is diminishing all the time as fiat does, but it's a very predictable, constant diminishing. It's very different than something that goes up, goes down, goes up, goes down. And it's just so hard to price your service and your goods if you have something else that consistently goes down, but is very predictable in going down, and fiat does that. So that is just what I see there. On the metaverse, man, I think we're so early in this hockey stick right now that I think we're all gonna be wrong on where this is, because either this hockey stick is gonna be so long that even in 10 years we're not at the part where basically the bats, like the really kind of vertical part starts, or we're so into this vertical part that we are just totally underestimating its power. So yeah, it can either be, I don't know, like 2010 social media where no one really grasps the power of what is going to happen over the next 10 years yet. Or 2008 probably was like a bit of more a defining moment there where people, oh yeah, social media, and then bam. Or it's like 3D print or virtual reality that's been always happening. Man, over the next 10 years, it's going to change the world. And that's how that's how it's been over the last 20 years somehow. Yeah, or cold fusion, same thing. Like, within the next 10 years, and that's been for the past 30 years. So I think it's so difficult for me to make a prediction there, because I cannot judge where on this hockey stick we are. Yeah.
Yeah, that makes a lot of sense. And I mean, even like thinking back like into 2017 or something, it was probably even at that time very, very hard to predict what's happening right now with like the market and DeFi and NFTs and the metaverse and Facebook rebranding and stuff. It's crazy times. And yeah, even 3 years is very hard to predict. But yeah, I mean, I think we're all on the same page that it's definitely something big gonna happen in the next 10 years. And then I like on the other side, what's your personal vision for the next 10 years? Or like asking like what drives you when you get up in the morning, kind of what is that?
This has changed a lot over the last year. I have a 1-year-old son now. Yeah, it's very difficult to explain this to someone if you haven't experienced that. A year ago I would have never said that answer. But now it's really, yeah, it's being a role model for my son. I think that is really a super big inspiration for me. On the other hand, it is about leaving a legacy. It's building a company that impacts millions and millions of people worldwide. That was always a dream of mine as an entrepreneur. Yeah, uh, and I think with Cake, we have a really good chance in doing that. Yeah, and then I always think maybe at some point, hopefully in 10 years, finally have a weekend where I can sleep out again. Any parent kind of understands that. Yeah, that would also be a dream come true.
Yeah, I mean, you have the double challenge there as like as a parent, and then in crypto where like crypto never sleeps, and you probably have a lot of things there. No, but that's great. And another question, like how do you stay on top of like all the news and everything on crypto? Like what's your main source of news in general, and how do you stay informed in crypto?
I think, to be honest, mostly it's Twitter. It's following certain accounts on Twitter. I actually make Twitter lists for that. So I have like um, various lists where I just add the accounts. Some are just news outlets, and I just get like basically the headlines there. Some are just like individual accounts. Some are like Bitcoin focused. Some are like Ethereum focused. Some are like DeFi focused. Some are NFT focused. And yeah, I go through that maybe, I don't know, once or twice a day. Doesn't take me so long. It's really efficient, I feel. And then when I feel, oh man, someone is not actually like interesting to follow or something, then I just remove them from a list. Yeah, so I think that's the by far the easiest way. Yeah, sometimes it's a bit tricky, and you have to be like careful. Especially if you're too much on the pulse, because you get really nervous with crypto. So I think some of the best investors, yeah, they don't actively trade so much. They're really more these buy and hold investors. Yeah, which again, also everything is kind of reflected in my own company, because I am a buy and hold investor. I'm really not a trader at all, and so we kind of attract those kind of customers as well. Cake doesn't attract the customers that are like in and out, in and out, in and out. It attracts the buy and hold investors, and that's kind of my philosophy. And what's really terrible for that is obviously if you get daily price updates, because that makes you nervous.
Yeah, and I just wanted to mention to everyone watching, you can go check out the Cake profile on Staking Rewards. It's stakingrewards.com/savings/cake. And if you're a user, you can even leave a review there as well. And Julian, just so you said you had a 1-year-old child, right? So I'm wondering, are they already making NFTs? And they're already making hundreds of thousands off NFTs?
No, I'm proud that he can walk a few steps. Making NFTs would be a bit of a stretch right now. Maybe it takes another year.
Yeah, another year or two, right? So getting back to Cake, so in your recent CEO reflection report, you mentioned an impressive 74 million USD in rewards were paid out to customers in Q3. So where do you see this number trending, and how will you continue to grow the reward payouts?
I mean, I think Q4 is. I mean, it depends a lot on the price as well. I mean, obviously, that's measured in dollars, right? So if crypto and Q3 was relatively weak when it comes to prices, people just forget that a bit because they look at October and they're like, oh, that was amazing, but they forget that October is Q4 already. September was like super super bad. July was kind of the end of that entire drop, and then end of July, August was like a bit of a run up, but then we had this crash in September again. So very low prices in Q3. So for us, that 70 something million rewards is actually super, super high. If we compared that to right now, like we used right now's prices, we would be almost double of that. And so now we have been growing. I mean, like at the moment we're growing with serious like percentages every day on our total assets, on our customer base. I wouldn't be surprised if we paid out. Depends on the crypto prices. But if crypto prices stay where they are right now or go higher, I wouldn't be surprised if we paid out 200 million in Q4. Um, I mean, our users are super jubilous at the moment. They couldn't be happier. Crypto is all time highs. The rewards are as good as they've ever been. It's bonkers.
Yeah, and talking about maintaining the continued growth, what's your current marketing strategy for both Cake DeFi and DeFi Chain?
Yeah, so on DeFi chain, and that's important. So on DeFi chain, I was one of the founders together with Yuzen, but today DeFi chain is very, very decentralized on all its kind of aspects. So I don't do any active marketing on DeFi chain. Obviously, what I do is I talk about it on my YouTube channel. I talk about it on Twitter. I mention it obviously in interviews, but I mention it just like I mention it as an investor in Bitcoin or as an investor in Ethereum. There's nothing that I do actively else on a marketing side, just because. Yeah, I don't know. I talk about Bitcoin as well, and I think everyone should invest in it. And I talk about Ethereum, and I think everyone should invest in it. Talk about DeFi chain. I think everyone should invest in it. To me, this is very, very similar and equal. And I think that's what good blockchains actually should be about. It should be a decentralized community that does that. And now we have so many members who are aggressively kind of spreading the word and the utility of DeFi for the Bitcoin ecosystem. So I think it's really exciting. On Cake, that's a company, so that's very, very like straightforward how we market there. There's three main pillars. One is performance marketing. We do this on pretty much any kind of platform or social media avenue that allows us to do that. The other one is influencer marketing. I think it's super efficient, and the other one is our referral marketing system. I think it's also super efficient. I think nothing secret. We looked a lot into all these sports teams branding kind of exercises that I don't know Coinbase and Crypto.com and FTX and all of them are doing. Um, I'm gonna be very curious to see how much of that is just kind of showing like how much balls you have and how much is really investment return, and how much is really a branding value. I'm still struggling a bit in seeing how this is going to translate into actual revenue for these companies. Um, let's see. I don't know how much they are paying, but like the Super Bowl ad for FTX, I'm sure it costs more than $10 million with everything. So yeah, let's see if that actually turns into $10 million in profit for them that they can spend. Let's see. Maybe.
Yeah, certainly interesting. And being from the Northeast here myself, I'm a big fan of the FTX Tom Brady commercial. I must say, it's nice.
I mean, absolutely amazing, right? I would love to know how much are they paying Tom Brady and Giselle Bündchen for that, right? And I don't think they're paying them less than 10 million. I think it's more. I would assume they're charging serious bucks for that. Um, yeah, I don't know. Maybe they don't put this into actual marketing dollars, and they just say, you know what, that's branding. That's just long term goodwill. Maybe.
Maybe even a sign at the top here. Who knows, right?
Yeah.
Um,
Yeah.
so now it gets to the point in the conversation where we're going to shift to community questions asked in the chat here, and we have some good ones. So here, first one's going to be from Fabio. He's asking for the top 3 coins you can give us to invest in.
Yeah, I mentioned them, and again, I think it's my like at the end. I think opinions are worthless. What really matters is the results, and the results here are my actions. And my actions are my most of my crypto funds, and also our company funds, are in 3 coins. It's in Bitcoin, Ethereum, and DeFi chain. So any other opinion is pretty worthless from my side here, just because. Why don't I put my money where my mouth is? And so I am putting it into those 3 coins. So it's a simple answer.
Yeah, cool. And then we have another question from John Steffes. He's asking, I think there will be parallel economy for quite a while, fiat and crypto. So I think this plays out like into like how is that going to emerge over the next years? Like fiat and crypto, is it going to be 2 economies, or are they going to merge or exist in parallel? Or how do you think about that?
I really think that they are going to be a bit parallel. Again, I see the crypto world. I know that the crypto world wants to compete with the fiat world, and I just don't see that the utility of fiat is going to go away. Yeah, I just need to be like, again, value comes from 3 things. Value comes from utility times its rarity times the number of people that are affected by that. And so the best is if you have something that has massive utility, that's super super rare and that everyone on this planet needs. It's very unlikely that you will ever find this, because evolution took care of that. It's very unlikely that you will have a lot of people that if something is so rare, right? So so again, it's built around these things. And with fiat, the utility is super clear. The utility is keeping a trade of goods relatively stable, and making it accessible to the people within an economy. The reason why the value of fiat goes down is just because it becomes less and less rare. And so it's just super clear. Bitcoin is the exact opposite of that. I just never understand how you can compare that. Bitcoin actually becomes rarer and rarer because people lose it all the time. So there's less and less access. The number of people that it affects is going up, where fiat is very, very stable. And again, I think Bitcoin's utility doesn't really go up, where fiat's utility actually can go up dramatically depending on the scenario and the time. So to me, these 2 things are, yeah, I think they're really parallel. I don't understand how they are competing.
What do you think on like now that like fiat inflates more and more, and like we have 6.2% inflation in the US, and I think the money supply has grown by 20 to 30% in the last year even, and like at which point are we gonna not denominate crypto in fiat anymore? Because like with all these inflation happening and like potentially like even hyperinflation or anything in some countries we already have that. At some point, it doesn't make sense to value something in the US dollar anymore. Is there going to be another currency, or it kind of also inflates the price of like the increasing price of Bitcoin or anything else, right? Because yeah,
I mean, there's still a super long path how the dollar is gonna survive. I mean, they still have so many metrics when it comes to unrealized gains, taxation, how they actually pull dollars out of the system. I don't know. I think like, yeah, I think this notion of the dollar disappearing over the next 25 years is such a gold and crypto credo. And as soon as you go outside of this gold and crypto credo world, and you go to anyone that's like heavily invested in stocks and equities, obviously it's heavily invested in bonds. Yeah, I mean, no one there comes up with this idea that the dollar is going to disappear over the next 25 years. I mean, I also don't think so. I don't think it's going to disappear over the next 25 years. I think Bitcoin will always be measured in a fiat currency. Yes, we can discuss that this is not dollars. I just don't know in what else it should get measured. Again, it is going to get measured unless a country or a large jurisdiction is going to base its GDP in Bitcoin. And I don't see that. I don't see that in the next, definitely not in the next 10 years. And I still have my doubts for the next 25 years.
Well, it's been awesome having you here today, Julian. You've been sharing some great perspective with us, and it's been a great pleasure. So how can people follow you and learn more about the stuff you're working on?
My Twitter, I think, is the best. My handle is @JulianHosp. Just be sure you're actually following the verified account. I know, just like in everything crypto, there's a lot of fake accounts, so just be careful there. And obviously, I would really love to welcome you as a user of our platform. We have a super cool promotion running at the moment. It's called the 11/11 promotion. So if you want to take use of that, then do it this week. Yeah, cakedefi.com.
All right, be sure to check that out, guys. Again, Julian is the co-founder and CEO of Cake DeFi. You can check out previous episodes of Staking Mondays on YouTube and Spotify. Be sure to read our SR20 index that was just released last week. We have an article up in our journal section on stakingrewards.com. And please like and subscribe to our channel. As always, guys, happy staking. For Mirko, I'm Ken. And this episode was sponsored by P-Stake, a liquid staking solution for the Cosmos ecosystem and beyond. Thanks, Julian. Take care.
Thank you.
With P-Stake, users can stake assets like Atom through the P-Stake protocol to gain staking rewards. P-Stake users also receive a wrapped asset, which represents the underlying staked asset. These derivative tokens can be used on Ethereum-based DeFi platforms, with support for more networks in the future, so users can maximize their yield by providing liquidity on DEXs. They can also be used as collateral for loans and much more, in addition to receiving staking rewards for the underlying asset. Why choose between staking rewards and DeFi opportunities when you can have both with P-Stake?